All right, y'all, back to work we go. J-Pow is behind us. We got that big pullback we talked about in last night's video. Now we look for bear traps to squeeze some stops and get this thing running back to all-time highs. Now, bear traps. I have 4 different types of bear traps, 4 variations of bear traps on my radar for tomorrow. One of those bear traps, though, if we can hit this thing correctly, could trigger a massive short squeeze, make our entire final week of September. So I want to make sure we know the game plan because we don't get that many of these pullbacks. So we'll cover entries, exits, the entire roadmap in tonight's video. So buckle up, take some screenshots, drop those questions in the comments below. Enough of the intro, though. Let's dive in and let's make some money on Wednesday morning. S&P SPY ready to go tonight. Nasdaq triple Qs are ready, aren't they? I have 4 clues on these charts that are telling me where I think the money is made tomorrow. The first clue is right here on the hourly chart. We know we're bullish overall on the higher time frames right now. S&P and SPY, very bullish. Nasdaq triple Qs are very bullish right now. I like to use the hourly chart as a directional filter. Clue number 1, the buyers are in full control of momentum. We do not have any major news for tomorrow. So we'll dive into our tick charts for tomorrow. Remember, tick charts are better for entries. I use the time charts for direction. But let's drill down to some tick charts here right now. 7,000 tick chart, all the time frames, by the way, upper left-hand corner. That moving average is the 21 EMA. It's the only indicator we need to make repeatable profits each week. There are 3 more clues here on these faster time frames. One big clue is a very strong run going lower. We pulled back all the way into that breakout pullback, so we talked about in last night's video, but late in the day, strong run down. Why is a strong run down a big clue? Because anytime we see a strong move lower in an overall bull market, we know all of that momentum says the sellers are going to try to retest that low before we resume the overall bullish trend. That's a big clue for tomorrow. The second clue here on the tick charts, there's a range down there. Now, what do ranges do? Ranges are magnets and they love to rotate back and forth. We use things like triangles or megaphones. We use things like pendulum swings, the amount below, the amount above. Ranges like to rotate. That is another clue here. And one of the most important clues, very important, are these previous ranges above us. The market ran lower into a range and then broke out of that range. What do range breakouts do? They love to break out, pull back. In this case, the one above us acts as resistance. So if you put all these clues together, we know we are bullish overall. And like I said earlier, we don't get that many deep pullbacks like this right now. So I want to make sure we capitalize on this environment. The challenge we have right now, though, is all of that momentum going lower right now. And that's why I said it's all about bear traps right now for my game plan for tomorrow. Let's cover a couple of them right now on the S&P and SPY, but later on in this video, I want to talk about the 4th, and I think my favorite bear trap of them all, a slingshot bear trap. We're going to cover that a bit later on the video, the Nasdaq, so make sure you watch all the way to the end. Now, you'll notice right now, we pulled back into that breakout pullback zone, and we're getting a bit of bulls here coming in at the opening bell right now. This may just simply run back higher again. We may V bottom off this low and go right back up to retest those all-time highs. If we do that, if we start grinding higher overnight, the first bear trap I'm looking for is the most aggressive of all the bear traps. It'll separate off that 21 EMA. We'll see a higher high in price, and we're getting in right below that low. In my free video classes, this is a technical bear trap. It's the most aggressive one by far. Because of that, I'll be going half size trade, quarter size trade as we go higher. Now, you know, as we go higher here, what's up there? A breakout pullback zone. So the second type of bear trap I'm watching for tomorrow is a breakout pullback bear trap. This range back here will try to hold as support, again, for a breakout pullback. Again, all of that momentum going lower is going to give sellers a lot of confidence to try to whack this thing right back down again. Let them give this thing a whack running lower, because once they do that and we make that run back into that range, think about the high of that range now acting as a breakout pullback zone. I can now use the second bear trap on my mind for tomorrow, which is basically a 2-try bear trap. Let the bears try once. Let them try twice. Higher highs in price. Once I have that, then I know where their stops are and I can buy right into those stops. Now this one could really produce a really good short squeeze here, because now anybody who sells short on the breakout pullback, once they see those stops getting run, they're going to bail on their shorts. This could really be a very explosive move going higher. So because of that, remember, after you get things working for you, add to your winner. I'm going to add more to this position if I can get my hands on it. Higher high in price, below that low. The same technical bear trap I use here, I can be a lot more aggressive on over here. Again, the first one's the most aggressive one because we're expecting this thing to want to go lower here, right? But the 2-try bear trap and the add-on bear trap, that is a gorgeous, again, second one here. It's like a breakout pullback bear trap, and you know where the market wants to go. It wants to go all the way back up to retest that all-time high. The third bear trap for tomorrow, and again, later on in this video, I'm going to save the best bear trap, the Slingshot bear trap. If you're a student of mine, you know what that means. I'm going to save that for later on this Nasdaq. Now, we may pop up here and we may keep grinding and grinding and grinding. Now, if we see a V bottom, again, remember, in most situations, when I see a strong move down in an overall bull market, it's going to want to retest and then bounce right back up again. But you know what? Again, we don't get that many of these deep pullbacks right now. So we may not get that retest here. I would not be surprised here if we see a V bottom and it bounces off this low. If we start seeing this thing grinding up overnight, remember, grinding markets are very difficult to stop. If it separates off that moving average, and usually it'll be a bit slow. It'll be a bit of a slow mover as it runs higher. Grinding moves are very tough to stop. So because of that, I can be a lot more aggressive. To do that, what I'll do is the third bear trap is a V bottom bear trap, or as we call it in the trade room, a pop and grind bear trap. Mark that trend line off the highs, bring it down to those lows, and find that channel, and then repeat after me. First test is the best test. A classic bear trap we see all the time in our trade room is just below a prior swing. Get underneath that 21 EMA. First test off the low of that channel, strong green candle, and you're in for the third bear trap on this S&P chart. Now, I've got one more bear trap I'm watching for tomorrow. Before we do that though, let's slow down for a couple of seconds, because I know most folks watching right now, I know you guys know these patterns. You're making money with these already. But if you're watching for the first time right now, this might be a brand new strategy. 2-try bear traps, technical bear traps, pop and grind bear traps. What is this guy talking about? Don't you worry though. I teach all these entry tactics in a lot more detail in my free trading classes. In fact, I have a ton of examples of this specific bear trap. We see a lot of those in our trade room. Guys, the markets are way too good right now not to be making consistent profits. So if you're still missing the best entries, what I'll do is I'll put a link up top here for you. Upper right-hand corner, hit that link that popped up there. Take that free trading course, because the strategy I teach in that short video course will teach you a stupidly simple trick we use that tells us exactly where the winning trades are going to be each morning. More importantly, guys, let's face it, we make our money by timing good entries. So in that video class, I'm going to teach you my 4 favorite entry setups so you can time better entries, get your confidence back in your entries once again. Guys, if you're missing the best entries right now, if you've lost your confidence in your current strategy, hit that link that popped up there. Watch that free trading course. You're going to love all the trading examples I include in that short video series. The best part is it's completely free for you. Also be aware too, folks, I'm going to put all the important links you'll need below this video in the description. Start first with the free video course. Most folks start making money all on their own, all from that free video class. So start there first. You're going to love that free video course. And don't forget 2 things. We trade together every morning, 8 o'clock Eastern time. You're going to love our morning trade room. Come trade along with us. I'll put that link below. And don't forget too, I post a ton of charts and videos and mindset stuff on Twitter or X during the day. If you're on the X platform, give me a follow. Again, all the details you'll need to learn the roadmap, get your confidence back, get consistency back in your trading, and hopefully make a lot of money because of it. It's all below this video in the description of this YouTube video. All right, so I promised you 4 different types of bear traps. The first one, the most aggressive one, we're jumping in with higher highs under that low. Again, half size trade, right? That's the first one. The next one is we use what was resistance now as support to try bear trap in a breakout pullback bear trap, right? That's the second one. Love that one, by the way. Love, love, love. As those bears come in, try to whack that thing lower, buy the breakout pullback, add more of the runner, right? And leave that thing to run. And the least attractive one, if it pops up and begins to grind, these are tough because it requires patience. These are not easy, but your patience is rewarded by find that channel off the highs, bring it down around that low, look left, find those prior swings. I love these, by the way. They're not as attractive though as the deeper pullback, but this one be fine by me. I would not complain about that one at all either. So that's 3 out of 4. Now, my favorite one is over on the Nasdaq because again, strong run down. We have to think now these bears are going to run this thing lower, and my goodness, there could be some monster bear traps waiting below that trading range. Let's look at the Nasdaq right now. I know, I hear you, NQ. It's getting restless over here right now, getting lonely. I know, I'm coming to you, buddy. On the Nasdaq right now, remember, the hourly chart is for direction, right? We don't use the hourly chart for much more than direction. But I'll tell you right now, look at this chart right now. Again, we don't get that many of these deep pullbacks right now. This one seems to be a really, really good spot, again, for some bear traps. The most important thing, though, is we're bullish overall, right? No doubt about that. That's our directional filter. I really don't even consider the other side of the market right now because if you want to be a seller, right? If you want to be a seller, this is the last place to do it. Right? So on these videos, I will cover the short side on these things, but this is not the place to do it. This is the last place you want to sell, right? You want to sell high. This is not the place you want to sell, not in a bull market. Now, I'm going to dive into these tick charts and talk about that final bear trap in a second. But first, if you're enjoying this video right now, please help me grow this channel by hitting that like button. Make sure you subscribe. I know we're all busy people these days. I know it's back to school season. Things are pretty busy this time of year here. I appreciate you all tuning in and watching my videos. So as always, thank you guys for the likes, the subs, all the ongoing support I get, all the love I get in the comments section. I promise I'm done wasting time here right now. Let's dive in those tick charts. Again, tick charts are better for entry timing, right? The time charts are good for long-term stuff, but get yourself some tick charts. These are from NinjaTrader. It's like $12 a month for the tick data, right? Don't waste your time anywhere else. Okay, on the Nasdaq chart right now, same clues. Strong run down. Again, strong run. Remember, don't confuse this. This is the tick chart, not the hourly chart, right? So a strong run lower is not a reversal overall. It simply tells us to respect the momentum. Respect momentum, expect those bears are going to want to go lower, and bam, we can look for that, what you might call a retest trade if you watch these videos a lot. And of course, the range down here. The range, okay? If you're a student of mine, the range, this is what opens up what we call a slingshot reversal. I know we love these ones. This might be my favorite type of trade these days, a slingshot reversal. Now, why do I say that? Because what do ranges do? Ranges like to rotate, right? Back and forth. Now, again, we're not a bear market right now. We're a bull market. So oftentimes what happens is as this thing rotates off the high, as these bears rotate off the high, we get this monster bear trap. And as it rotates off the low, it doesn't stop, right? It just starts ripping, and we call this a slingshot reversal. A slingshot reversal is a bullish market overall into a bearish range, right? Makes sense, right? It's a bullish market overall into a bearish range. And if you understand how range rotation works, it goes up, down, and then rips, right? It rotates off that low, and it just crushes all those bears who confuse this with a bear market. That is a huge clue for me, and really the reason why I said this final bear trap down here could trigger a monster short squeeze. And again, don't lose sight of what's overhead. That is a range as well, right? And what do ranges do? They love to break out, and they love to break out pullback. So the same reason why this is a key area of resistance is the same reason why if we were to break out of this range, I would use this area as a breakout pullback, right? This area right here, that becomes a breakout pullback zone as well. Whenever a range breaks out, it's almost a guarantee we're going to get some sort of breakout pullback at some point in the future. Now, the same game plan outlined earlier on the S&P applies very much so here on the Nasdaq. The same idea of the higher high, getting in, the breakout pullback, right? The pop and grind, going higher, finding that channel, all the same stuff we said earlier on the S&P can be applied now to the Nasdaq. But if we're lucky tomorrow, right? If we're lucky tomorrow, we'll go up, maybe a bit higher here, and then come crashing back down. Now, when it comes crashing back down, all of the inexperienced traders are going to be shorting this thing as it goes lower because it will feel very bearish, right? It will feel like a reversal. But again, we don't use the tick charts for direction. The tick charts are for the entry tactics. So when all the inexperienced traders who simply haven't learned this lesson yet, it took me a long time to learn this lesson. You're learning this in a few hours every week here on this YouTube channel. But now, as all the rookies now scramble going lower now, here is one of my favorite bear traps we're going to get here. It's a two-try bear trap. Bears once, higher high. Bears twice. Now, squeeze those stops. Now remember, where's the market trying to go? It's trying to rotate the amount below, the amount above. Now we know where our target, at least one target is on this. And remember, guys, if there's one scenario where you need to add to your winner, it's always a range rotation. Because if you haven't learned this yet already, when markets rotate back and forth, they move really fast. They move really, really fast. You'll learn this eventually if you haven't learned this already. But when this thing rotates, it'll rotate really fast. It just kind of whips around back and forth in this range here. So as it rotates off that low now, remember, look for the separation off the moving average. This is why I only have the 21 EMA on these charts. I don't want anything else cluttering up my mind. Separation, higher high, and then we're adding to our winner off of that low. And again, you will want to leave a runner on this, a two-try bear trap, an add-on trade as we call it in the trade room. Again, a slingshot reversal off of that low. Now, what if we don't get that bear trap down there? Because in all reality, that might happen, right? We might get, I would not be surprised if we popped up overnight and got this thing just ripping going lower here, and there's so many buyers down here, we don't get the bear trap down there and back up again, right? It just whoop and runs right back up again. These are tough, right? These are tough. Now, we talked about this earlier on the S&P. This V bottom scenario, write this down, guys. Anytime we see a V bottom, it's always one goal, and that is to get in underneath prior swings. Write that down. V bottoms, again, remember, a strong run down wants to retest, okay? So if it V bottoms off that low, sellers are going to be trying to run that thing back to that low. Buyers, smart buyers are going to know that. They're not going to buy into it up here. They're going to wait to get below these prior swings because it's almost like protection against those bears, right? There's no bears right there. Lots of bears up there, okay? The secret of this is find that trend line, right? Mark that channel off the highs, bring it down around that low, and man, oh man, right? These are, again, a lot of examples of these inside the free video course. These V bottoms, or as we call them, pop and grind, right? Pop and grind channels, they are some of the easiest ones to time the entry because momentum's already moving in the right direction. The hardest part is simply not chasing after it. Love, love, love that V bottom reversal off of that low. And then one last thing I want to remind you here. We have a lot of momentum going lower right now. It's very important to remember that if this gets a bit overdone to the downside, remember, we're way high up right now on the hourly chart. We could go another big leg lower and still be a bull market right now, okay? Do not forget that. We could make another big leg lower and still be a bull market right now. Do not forget that for tomorrow. We're so high. Look at this thing. We're so high up right now, right? Okay, so knowing that, remember, if we run lower, and who knows what tomorrow will bring, right? Maybe Jay Powell says something, Trump says something, who the hell knows, right? It's always wild these days. If this thing gives us a strong leg down, remember, breakout legs are measuring legs, okay? So once we know how big the breakout leg is, it won't be this leg, okay? It will not be that leg, okay? It's the breakout, it's the breakout, the pullback, and the breakout leg, okay? I say this because anything's possible. I don't have a crystal ball for tomorrow. I just want to make sure that if you're not with us in our trade room, do not let a two-legged move down here, do not let that fool you. This could easily turn into one leg, two leg, all the way down. Now again, talk about scary trade, right? Talk about scary trade down here. Absolutely, that will be a very scary trade. But remember guys, the scarier it is, the better it pays. The more uncomfortable you are, the better you get paid, right? Scary trades are the best ones. So I'm going to go out and look at big leg, measured move. Again, breakout leg, measuring leg. That area right there, that's the money zone right there. Trap those bears in once, twice. Trap them in, squeeze those stops. This one could be a really big rip because now everyone's caught short except the smart money, right? They're the ones here buying this thing off of that low, and we go in and add to our winner from there, right? Add to our winner, always, always, always add a piece back on again. Bear trap, add on. Now, one last variation, we may see strong run down. We may get that bear trap once, twice. We may pop right back up, get our 1-to-1 first target, get rid of all that risk, and we might see another leg going lower. Remember, a retest trade, right? A retest trade. Again, anytime we see a strong move, expect a retest. If I see a strong move, expect a retest, and then do it again. Do it again. Bears once, bears twice, trap those bears in. As you can see, right? The lower this thing goes, the better it is for us. So whether or not it's a retest trade like this, or it's a breakout leg measured move down here, it's all money, baby. It's all gravy, baby, underneath that low. Remember, these are tick charts. Do not let this thing confuse you as it goes lower. Keep your eyes on the hourly time frame. Use that for the overall direction. All right, well, I'm getting excited to talk about this stuff with you guys here tonight. In these videos, we plan our trades, and tomorrow morning, we're going to trade our plan together in the morning trade room, 8 o'clock Eastern time, which reminds me, if you haven't joined yet, come join us tomorrow morning, every morning, 8 o'clock Eastern time. Guys, the easiest way to start making money each day is to learn and trade along every morning with us at the opening bell. I'm going to put all the important links you'll need to get started down below in the description of the video here. Start first on that free video course. You're going to love all the trade examples I include on the website for that. Then come join us in the trade room and we'll do it together. In the meantime, guys, hope you learned a bunch this evening. Hope you earn a bunch with this information tomorrow. Be well out there. Be nice to each other. And by all means, you better be here next time. Adios, amigos. Bye for now.